Watching. I'm working more on my stock market tool in Python. I'm going to go over real quick what I've done so far and what I'm up to today. This is the second stream of the day, so it's going to be shorter. I'm just shooting for an hour here, but we'll see if I get into things. So if you're interested in stock market prediction, markets in general, AI coding, Python, anything like that, subscribe to the channel. I work on this every day, and I do all sorts of projects. So check out the channel, and you can see other stuff I'm interested in. So these are my two goals for the project. Number one, I want to beat the S&P 500 by a significant margin in all regimes, and make money. So if the S&P is going up, I want to be doing way better than the S&P. If the S&P is going down and we're in a recession, I want to still be making money reliably. But the percentage returns don't have to be anything crazy. Should be positive though. My second goal is to create a usable tool that anyone can use. So I'm writing all of this in Python. I'm generalizing everything, and all of the stuff I'm doing to look at the models is leveraging the code base that I've built. You can get the code base for yourself and execute all parts of the model, test it robustly in every way that I'm testing it. You can do all that in under 50 lines of code. So check that out if you're interested. This is the general outline for the strategy I'm working on right now. So I'm starting with data. You don't want to use all data. Some data is going to make your model worse. Things like test tickers or ETFs. ETFs move differently than stocks. If you have low volume stocks, those aren't going to work well. If you ever look at those, that kind of looks like just like it's really not like, if you look at a really low volume stock, it's not at all like Apple, and it's not going to work well for your universe. And finally, you want to exclude things like penny stocks. So once you have a good stock universe, or I have a good stock universe, I'm going to use that, feed that into the model, and the model's going to use that to train. The model has all sorts of features and targets. Once I feed that into the model, then the model is going to give a good output. Once I'm confident I have a really good model working, I'm going to create a portfolio model level, and that's going to look at macro features of the stock market, like volatility index, interest rates, things like that. And it's going to use that information to position a portfolio. Once I get a good strategy working, I'm going to paper trade it for a month to make sure that it's robust. And if it looks good over that month of paper trading, I'm going to go live with it with real money. So if you're interested in that, that's in the future. Subscribe. So I started this at the beginning of the year. This is where I was at in January. I go over this in other videos. I'm going to make a video summarizing everything. But the thing to get out of this is the best performance I was able to get out of the model was about 51.5% directional accuracy, so predicting up or down. I was able to implement a portfolio strategy, you see here, that worked really well. However, it was very fragile. It was only picking one stock per day, and to get really good results, even one stock per day was barely good enough to implement. And to get really good results, I tried thresholding, but I had to use kind of unstable threshold methods. So for those reasons, the model wasn't very robust. I need something better if I'm going to use real money on it. So I wanted to look through all sorts of different features and targets and see what works really well. The problem with how I was writing things is I was doing a new script every time I wanted to change the universe, change the model, or change the portfolio. So this was a lot of files. Implementing new features was going to take a long time, and this isn't a very efficient way to do it. It also would have been unusable for anyone else, which negates the second goal I have. I should mention that for the second goal here, I'm trying to make a tool that anyone can use. One key constraint I've placed on it is that the tool needs to be absolutely free. So use free data sources. So I found a really good data source. The link's in the description. You could check that out. The GitHub's also in the description. I have some scripts on there and instructions for getting the data from the free data source onto your computer. So check those out if you're interested in working on this yourself. But basically, the reorganization made it so that everything's really diverse and flexible. I can change things very easily without having to change the whole code base. So these are all the features and targets I implemented. The key here is these are all on price data. And I need to add in fundamental data, but I've had some trouble with that. I'll get to that in a second. Uh, I found a really good model, what I thought was a really good model. And these are the results here. So you see the decile analysis. It should look like a nice staircase going up with a decile. We see that here. It's also beating every metric I'm shooting for. So I'm looking at information coefficient, standard deviation of the information coefficient to information ratio, both on a daily and annual basis, and the t statistic. So these last four variables should tell me the stability of the model. The information coefficients tell me the predictive power. I went through and tested this every which way that I could, and I was getting really good results. I tried adding some macro features like treasury rates you see here. The problem is that's the model I'm doing is predicting returns relative to the market, and so since these features are going to be the same for every stock, it's going to degrade the model, which is what I found out here. But I went through, tested it every which way I could, and once I was finished testing and implementing everything to make sure the strategy for training the model was robust, I got even better metrics than I was originally getting. So this was maybe like a week and a half ago. I was really confident in this, but then I found when I split the data differently, the metrics were falling off and underperforming all of my goals. And so I needed to look in to why this is. This is the first indication that the method isn't robust enough to use live and to start paper trading on it. So I did a walk forward analysis trying to see what was going on with the model. And basically you see here the information coefficient is falling below the threshold threshold in 22 and 24. The performance is degrading over time. And you also see this in the information coefficient to information ratio, that the performance is degrading over time. However, even though this is degrading, it's still above the threshold that I'm trying to get for every metric. So I would like to stop the model from degrading, but even with this, it's showing basically that the stability is good enough, but the predictive power is just below what it needs to be. So I need to add something to squeeze out some more predictive power. The first thing was to add sectors, so I didn't have any sector information to the model. This took about a week to get. I finished this up on Thursday, and I had the data on Friday because the code takes 13 hours to run. Again, if you're interested in getting this for yourself, the script's in the repository, so you can just go there, run it, and it'll download the sector for each stock in the database from the SEC Edgar database. And so this is kind of a hard thing, but I finally got it working. And so when I added sectors as a feature, this made the model perform worse. I wasn't really sure exactly why, so I needed to look into this. I tried adding sectors, so I tried neutralizing. Right now I'm neutralizing the features and target to the market. When I tried neutralizing just the target to the sector, you see here that it was performing worse. And that makes sense because the target is basically saying how it's going to move within the sector. And so that's going to be, some sectors sometimes are outperforming the market, some are underperforming the market. So then I tried neutralizing all features and the target to sector, and that didn't work either. So I thought this sector thing's not really helping me out. But in the stream earlier today, I basically found out that you don't want to normalize all features to the sector. Some of them, like mean reversion and trend, mean reversion and volatility, so like the trend features, you want to normalize to the sector, but the other features you don't want to. So here I tried adding basically all the same features as the really successful model, but then I added some new features. I added also the mean reversion and volatility features. I already had those normalized to the market, but I added in all of those normalized to the sector, and I saw that the model improved on every single metric. I tried dropping out the mean reversion and volatility features that were normalized to the market, and that made it perform worse than it did here. And the predictive power, the information coefficient, was worse than the original model. However, the other values, the stability values, showed that it was better than the model. Also, yeah, the Sharpe ratio is slightly higher, but nothing crazy. And so today I'm going to work on basically these are using SIC codes. And if I add the SIC codes are really outdated. They're from like 1930. And so I want to try adding these NICS sectors, North American Industrial Classification S standard, maybe. I want to try converting these SIC sectors to NAICS to see if it improves the model. It should, because NAICS is modern, and like I said, the SIC codes are from 1930. And it's grouping together things like mining and energy are in the same sector. So, it's often those are pretty different nowadays. It also doesn't account for things like technology, companies like Tesla or Apple. It's going to have no idea what to do with those. Um, Another thing I was doing is I was trying to trim down the universe. So it turns out in my original model, now this is kind of concerning. The original model that I was doing really well on was getting about 0.025 or so. Right up here, what was it? 0.0257 for the information coefficient. However, I was including all tickers that I had in the model using some filters. And the problem is that's including things like exchange traded features or tickers, like financial products, test tickers, which are obviously really bad. Test tickers are like things to use that the NASDAQ uses, fake tickers that basically never change in price. And so I tried excluding all of those from the model, but the model performance got much worse. I tried even using the same exact universe as I was using for the one that got really good results for the model. And same exact universe, just start before I add the filters. I tried adding in the filter to filter out everything. So I'm only using common stock, ADRs, which are foreign companies listed on the stock market, and real estate investment trusts. Um, and so if I only use those, you can see here that the model's performing way worse. And it's not doing well at all. So I need to look into this. My suspicion is that this is the true performance, and the other model, it's buying stocks that I can't really buy. So I'm gonna need to look into that. Uh, yeah, so that's kind of the overview. Now I'm gonna get down to business. Let me put in some music. All right, so what do I want to do first? What do I want to work on this stream? I could basically work on this NICS sectors, see if this improves the model. Oh, the other thing I did, so this is model 18, and this guy's model 19. I need to look into these results. So after my last stream ended, I ran a walk forward analysis. So walk forward analysis on model 18. So these are the results. Let's go into the model folder, or the walkthrough folder. So I saved this as the wrong thing. I should have given it a new thing, but I basically lost the walkthrough for model 12. Oh, I did save it. Oh, great. Oh, good. So I saved a PNG of that. And here are the walk forward metrics. Why isn't that popping up? Quick look. So this looks pretty different. Let me put in the other walk forward. Always remember me, my joy. Always remember me. Yeah, so this obviously looks worse. So the question is, why does it perform better here, but it's performing worse here? And although it's performing worse, 0.01, 0.02, I think the IC is better for, well, it's obviously better for 24. So IC 0.019 for 24. Oh, here it's 0.019, so that's pretty good. Here it's 0.008, so, but for 22 and 23, it's negative, so it's really bad. Yeah, so I don't know. I have to look into that. What is the cause of that? Let's move all of this up. Let's move this guy up. So this appears to be good on recent years, but bad on other years. So what I want to see now is, what if I do model 18, but switch the universe to 6? So universe 6, just to remind myself, same as universe 1, but drops everything, not common stock, etc. So should I use universe 5 or 6? Let's go to remind me of the best filters to use for my universe. Reset 7 p.m. So it should be reset, right? It's 8 p.m. West Coast and even later on my computer, so. Security type filter, yep. Liquidity filter, top 2,000 to 3,000 by dollar volume, not raw volume. So am I doing raw volume here? Clean analysis. And what's the... Hey, Eargasm. How are you? I'm pretty good. Just working more on the model. I already did a stream today, but it's 8:30 and I didn't have anything else to do. I figure I may as well work on this Sunday night. Sunday night's always kind of depressing because I got to go back to work Monday, but oh well. So let's see the top liquidity filter. Dollar volume is this guy. Average dollar volume winners. Average dollar volume dot n largest. Okay, so I am grouping by dollar volume. Price filters, so we have that top 2,000 to 3,000 by dollar volume. Okay, so let's do let's make a new universe. So I'll say here, let's get the suggestion from Claude. Filters, common, stock, security, type, filter to get only common stock. Common stock, what else do we want? ADRs and REIT. Alright, next, let's do liquidity filter, top 2,000 to 3,000 by dollar volume. Okay, liquidity filter, top gets top 2,000 by dollar volume. Price filter, min $5 per share. Oops. Drop out everything less than $5 per share. Crash filter, volatility filter. Okay, so this is what we're gonna do. Would it be better to use top 2,000 or 3,000 by volume, and why? Also, would it be better to top 2,000 or 3,000 by volume? Also, would it be better to filter out a top percentile by volume than a total number? So I kind of think doing a top percentile, like get top 10% by volume, might be better than just doing the number. Fixed number versus percentile. Okay, so let's do top 2,000. Yeah. So give me the filters for this. So let's make a new universe. Get universe 7 is equal to true. Turn that guy off. And then let's go down to universe 6. Just copy it and do the same thing. Save it to 7.feather. And let's get those new filters. And then let's go back to Model Explorer. So, this guy's Universe 7. Save it. And now let's run Get Universe. Okay, so we're going to get this universe number 7. Let's go back to Model Explorer. Turn that guy off. Now let's do 18. Turn this guy on. Save and switch the universe to 7. and I'm going to see how that performs. So troubleshooting universes. Today is the 29th. Three 2026. Alright, so now we're getting the universe. Let me know if you have any music recommendations. I don't have anything good to listen to. I need some new music. Alright, where's the set? 2019, so it's not too far from being done. On your way to the light. Hey, everybody. Hey, Christos. How are you? I'm pretty good. Just working on this model Sunday night. I got a good result earlier. Let me show you. Basically, I had this, and basically my conclusion here was I need to squeeze out some more performance from the model. Both the predictive power in the middle, represented by the information coefficient, and the model stability represented in green by the information coefficient to information ratio. Those were falling off. However, the stability was okay because the information coefficient to information ratio, I just want 0.3. So it was performing well enough here. I needed to squeeze some more performance out. So over the last, it's been a little over a week, I spent a lot of time getting the sectors. That took a really long time, but I finally got them. And then I incorporated the sectors, and the problem was this made the model worse. And so I thought this would improve the model. I wanted to figure out why. And then this morning, or I guess that was this afternoon on the stream, I found that if I'm using all the same features as the really good model, and then I'm adding more features for the mean reversion and volatility, I'm normalizing those to the market already in the good model here. But then I added more features where I'm neutralizing them to the sector. So, and it turns out that improved the performance of the model in every way, on every metric. This one, where I dropped out the market neutralized mean reversion and volatility features. That gave a worse predictive power for than the model, but gave a better stability. So then I did a walk forward analysis with this middle one here. But then you see it's dropping negative in some years, but then it seems to be better in many of the years, although not all of them. So that's kind of a question. But this does show in 24 and 25 it was good enough to use. So, hey, Singh, how are you? Hey, Michael. Have you tried using unsupervised clustering to find different groups of stocks instead of sectors? No, that's more advanced. No, I haven't do that. You mean like Gaussian like grouping or something like that? Because I haven't done that. But that's in my to-dos. Yeah, so that's basically what I've been working on. Now I'm trying to look into the universes. So one thing, like I said up here, you don't want a bad universe. You want to make sure only good things are in the universe. And I realized that I was doing filters on the universe, but I was still starting out with all stocks. And I want this to only train on common stocks, ADRs, which are common stocks from other countries listed in the US market, and REITs, which are real estate investment trusts. So if I only keep those but do the exact same filters as the really successful model, it's actually performing worse. And so the question is why. So I need to look into this here. Wait, the progress on the model. Yeah, it was pretty cool because I made really good progress. I thought I had a great model, and then I spent like a week and a half just hitting my head into the wall. So It was nice to get something that gave a little bit of an improvement, but I'm really concerned about this universe thing. So I'm going here. I created a new universe. So now I want to run the same model that I had here, the one that's showing improvement, and try this other universe and see how it does. So real quick, let's check. Model 18's on, universe is 7, so let's save it, and now let's run it. We got to get away. We got to get away. So yeah, let's see how that runs. Now, I was looking into the metric calculation because basically the way the Spearman rank correlation, which is this information coefficient metric I'm using, the way that's calculated, if I trim those, basically it's stocks that aren't moving a lot. So like for instance, the test stickers for NASDAQ, those never change in price. And it's basically, I don't even get what that's for. That's so either NASDAQ can do some testing or like hedge funds can do some testing. But that's never changing in price. So of course the model should have really high predictive power on that. And it really shouldn't be changing the predictions over time. It should just predict constant zero returns. However, when I'm including them in the universe, so the Spearman rank correlation is 1 minus fraction, and the numerator of the fraction is 6 times the sum of all of the square differences for the prediction. So predicted value minus real value squared, you sum all of those up. So like those test tickers, which aren't changing over time, that sum should be really low. But then the denominator is something like n squared times n minus 1 or something like that, where n is the total number of stocks in the universe. So it has those test stickers aren't gonna add a lot to the numerator, but it's gonna make the denominator way higher. And then it's 1 minus that fraction, and so the thing that's being subtracted by 1 to get the final value for the information coefficient is going to be a lot smaller. So basically the information coefficient is artificially small here. And so like I was saying, I thought I just need to squeeze a little bit more predictive power out of the model. I think I'm actually going to need to squeeze a lot more predictive power out of the model. But I can do that by adding fundamental features, but that's going to be kind of difficult. So the problem before is that my fundamental features, not all of them were included. But let's go look at them right now. So I'm in, oh no, this is the wrong folder. Get out of here. So good, that guy's still running. So let's go in here and look at the universe. Import pandas as PD. And I'm going to call the universe just you, and we're going to do pd.readFeather, and let's read the universe file. So it's in /data/universe universes/7.feather. And then we have, so that's the universe. Now what did I call? So let's do import os.listdir. It's something like valid tickers, so let's look at /data valid equity tickers. So I'll just call that T for tickers. I'll call it VT for valid tickers, is equal to pd.read. So what is that? That's a feather file. Read feather, and we're gonna read /data/ valid equity tickers. Equity tickers dot feather. Okay, so now I want to find all tickers that are not, I want to find all tickers that are in the universe, but not in the, oh no, that's not true. That's not what I want. I want quarter data. So where's quarterly data? QQQ, quarterly fundamentals. So I'll do f for fundamentals is equal to pd.readFeather, and let's read /data/quarterly fundamentals .feather. Quarterly. Okay, so now we have the fundamentals. Okay. I have a data frame of the tickers in my universe called U. I have another data frame containing information for tickers in my universe called U. I'll say price data. I have another data frame called F, which has data for quarterly fundamental reports. The ticker column in each is called account symbol. Write a line of Python code which will show me all tickers in the universe which do not have corresponding fundamental quarterly reports, which are not listed in the quarterly reports data. And then here we're gonna look at this next. Oh, this is trying to get my W-2 from the IRS. I hate the IRS. Taxes are such a pain in the ass. Alright, so let's do that. Okay, so these are not listed. Yeah, so the problem is I don't have quarterly reports for all of my tickers. So I have some things I can do. I could filter for, so do ETF submit quarterly reports? Alright. So let's see, how far along is the model? So trial 36, it does 50 trials and then it stops. So we'll see how this output is on this new universe. I'm hoping it should be better, but we'll see what happens. So what do I want to do now? Basically, I'm going to have to figure out fundamental data. So what do you think about this strategy? I'm going to alright, what am I gonna do? I'm going to pull all quarterly reports listed in SEC Edgar. Then I'm going to add a filter which removes all tickers each month which do not have the latest quarterly. How do I just accept that report? Would this be an improvement to my filters. So I'm hoping this will be what could be the drawbacks of this method, if any. So I want to see, basically I'm thinking if I could do this, then I could just write some code to pull the quarterly reports from SEC Edgar, and that would make it easy to do the, to get the data. So these are the results from the model. Let's see how the metrics were. So information coefficient was really bad. 0.0. Well, actually, it wasn't great, but it wasn't terrible. And the thing is, the information coefficient is just going to be worse. Standard deviation, not so bad. About, what is that, like 12 times as high? So standard deviation is within my range. Information coefficient to information on a daily basis. I always forget daily, but annual I want 0.3, so that's good. The T statistic is below my goal, but that doesn't matter as much. Information coefficient to information ratio is more important. So where did I list the goals? 0.02 to 0.03. 0.08, so basically this is showing it's hitting all of the stability metrics I'm going for except T statistic, but like I said, that's not as important. But it doesn't have the predictive power I want. So if I could do this universe and add fundamental features, I should be able to have good predictive power. This is the results of the output. So the decile analysis looks a lot worse, but the long short spread actually doesn't look so bad. So I think I'm headed in the right direction. So let's do here, model 18. Troubleshooting universes. Boeing and let go. On universe 7. So let's define universe 7 real quick. Someday I'm ready to go. Someday. Run away like we're running in circles. Run away. Alright, so less than $5 a share, but drop out everything that had over 50% crash. Ready to do someday. So what if we have mean reversion relative to the sector, we have value relative to the market. So that's already encoded in the model, but what were some things, I wrote some things to do. So add 2 to 3 market contests, market return and market volatility at your key windows. So market volatility will be the same. So let's see here. Adding market volatility didn't improve the model because the model... so let's look at the answer. It's a good idea with one major pitfall. Why it helps. It solves your security type problem more elegantly than rejects patterns. Anything that files a 10Q is by definition an operating company. It's a natural filter that cleanly separates real equities from everything else without maintaining fragile pattern matching rules. Yeah, that's my problem. It also removes shell companies. The pitfall is look-ahead bias. A 10Q for Q4 2024. Oh, well, that's fine. I've already actually fixed that when I implemented fundamental features earlier. Foreign private issuers, they don't file 10Q. If you require a 10Q, you'll lose every ADR. Might miss a deadline by 2 weeks. That would be fine. Creating unnecessary turnover that costs you in transaction fees. I don't know. Newly public companies file their S1 prospectus, but may not have a 10Q for several months after the IPO. I'd be excluding them. Use the 10Q filing data as a supplement to your security type filter, not a replacement. Keep your regex-based filter for the initial screen. If I add in fundamental features calculated using quarterly reports, won't I have to drop everything that doesn't have a quarterly report anyway? So let's see what it says. Not necessarily. So stock with no fundamental data would still get predictions based on its price features alone, with the model learning a default routing for every fundamental feature that's missing. Question is whether you want that behavior. There's two ways to think about it. Argument for keeping them. Your price features carry signal on their own. A stock with strong momentum, low volatility, and bullish technicals might be a good prediction regardless of whether you know its P to E ratio. Dropping it just because a 10Q hasn't been filed yet throws away a valid price signal. The model can learn that missing fundamentals plus strong momentum means something different from missing fundamentals plus weak momentum. Argument for dropping them. If your fundamental features are important to the model, stocks missing those features are getting predictions based on an incomplete picture. The model's confidence on those predictions should be lower, but LightGBM has no way to express that. It gives you a point estimate either way. You're also mixing two populations. Stocks where NaN means no data available. Yeah. Has fundamentals. This lets the model explicitly learn that the two populations. So I'm going to say, hey, Sir Night Night. Hello again. How are you? Oh, the night. I started typing Sir Night Night. Okay, so the model has insufficient performance when I use only price features. I'm going to need to incorporate fundamental features as well. Does this change your assessment at all? Run away like we're running in circles. Put the quarterly report filter early in the chain before liquidity, because there's no point ranking by dollar volume and then throwing out half the winners for missing fundamentals. Okay, so now I really need to incorporate the fundamental data, but that's going to take a long time. That's going to be several streams and maybe will take a week. So before I do that, I want to see, can I get this mapping from NAICS to, and I need to look into what the hell's going on here. Look, Sir Night Night. So I found that basically the model performs better if I'm doing all the features I had in Model 12, the good model, and then all mean reversion and volatility features. I add new ones that are normalized to the sector instead of the market, but still keep the market normalized ones. And here's what I get here. But look at this, the big spike that we saw in 2024 that you thought was interesting. It's an even bigger spike here. Also, these guys go negative, so the predictive power becomes awful in 22 and 23. Comes back in 24 and 25. But this, the forward Sharpe ratio in 24 becomes huge. So I don't know. That thing you identified is becoming even more of an issue on the better model. But I want to see, so right now it's normalizing to SIC sectors, and those are really outdated. Oh, let me document this. Yeah, SIC sectors, you have the fine grain sectors, but there's also, those aren't going to work well because there's like 770 of those. So if you have like 7,000 stocks in your data, that's just way too fine grain to use. But you can also classify them into macro sectors. There are 11 of those in the SIC data. And that will actually help. So that's what I'm doing here, is using those 11 macro sectors. But then the problem is these macro sectors are really outdated. They haven't changed since 1930. So, it's not performing as well as it could. Instead, I could use this North American Industrial Classification System. They give sectors too, and those are going to be a lot more updated. They include things like tech, separates out energy from mining, which the SIC sectors don't, things like that. So that might be an improvement. Or I could do what Michael suggested earlier and use some automated classification system. The problem is that's going to be really messy, and to get that to do something that's reliable is going to be really hard. So I don't know about that. So let me try to get so adding NAICS sectors, and we're gonna put in a key question here. So let's say key question. Does NAICS sector neutralization NAICS, so we're going to say NAICS modern updated sector neutralization outperform SIC old from 1930, so 100 years ago, outdated sector neutralization. Okay, so let's see if we can answer this question. I want to add NAICS sectors into my SIC sector. I have the SIC code. I think it's 4 digits, but let's go make sure. So sectors info is what we want. Let's take a quick look. Yeah, 4-digit SIC code. I have the 4-digit SIC code for every ticker in my data. How can I map the SIC code onto NAICS sectors? I don't need yeah, so I don't need fine grained sectors. So large scale macro sectors. Two-digit sectors. So I don't need to map to the 5-digit NAICS sectors. I think I know what happened. I think, like most models, the model doesn't do well in highly volatile markets. I think during that period, the market was generally topsy-turvy. Um, Wait, you think during what period? 22 and 23? 22, it was basically a recession. We had a recession all year in 22. So I think that explains that. Um, Most of the gains in the market in 23 were concentrated in AI companies. That's interesting. Because 23 here, it did pretty poorly. But then the information coefficient, the information coefficients here I think aren't good anymore because I was using stocks that I shouldn't be including, like NASDAQ test tickers. Volatile markets, you mean between 21 and 23? Yeah, 21 and yeah, 21, 22, and 23 were crazy years. I mean, 21 was a ridiculous bull market. 22 recession. I honestly don't remember what happened in 23. I was too depressed to pay attention. Now I'm finally back in tune with the markets. I don't need the fine grain. So what are they? 20. I don't need the fine grain 5-digit NAICS sectors. I just need the 22-digit macro sectors. How can I do this? 23 was the AI rally. Well, I guess ChatGPT, when did that come out? That was the beginning of 23, right? I remember when it came out. But they had they had GPT-3 before, and that was like among computer science people, that was already like breaking everything. That shows if you're just paying attention to like the actual technology, you can be way ahead in the markets. Because like 2020, since 2020, really, all the AI people were freaking out about the AI boom, but it didn't hit the stock market till 23. That's why I'm excited about fusion energy. I think the average person has no idea why fusion is more exciting than fission. But I also think, fission has too much. The big thing is no risk of meltdown because that is fusion energy or fission energy is such a great thing. But I don't think it's ever gonna get big until everyone who remembers Chernobyl and 5 Mile Island die, because basically people say, why the fuck would we take that risk? I don't know. But that would give us energy independence. Imagine no one would give a shit about the oil thing if everyone had fission reactors. No, but ChatGPT, they released their app. Remember? Hey Paprika, 2011. I'm going back to 2011. No, but remember ChatGPT released their app in 2023, and they kept saying, "Oh, look at the Facebook users over time. Look at the." I always thought that was the most bullshit thing because Facebook, they compared it to all the social networks. So it was like Facebook, Twitter, Instagram, all those things, and it was like, look, ChatGPT got way more users, but it's like it's not a fucking social network. I never understood why they compared it to the social networks. Anyway, Paprika, I'm good. It's Sunday night. Sunday night's always depressing, but here we are. I figured I didn't have anything to do. I have to get my tax information together to go see the tax guy and get that done with. It's the most brutal part of the year. I hate taxes. It's just so mentally oppressing. It's so not designed for me. I'm a human. Um, the official Census Bureau crosswalk is many to many at the detailed level, but for mapping to just the 20 broad NAICS sectors, you can build a practical lookup. The tricky part is that SIC lumps things together that NAICS splits apart, particularly services, which scatter across about 8 different. Yeah, but if I know the 4-digit code, it should be fine. But if I have the 4-digit code, SIC, shouldn't it be easy to map to the 2-digit NAICS? Oh, so when did GPT web app Wealth Simples? Honestly, I did I haven't even finished my 2023 taxes. I just paid the IRS more money. 2023 was odd because I had my job and then I worked freelance. I made I don't know, a good chunk of money doing freelance stuff. Um, and the freelance stuff is such a burden. So all I did was I calculated what do I owe, and then I raised it by 40% and then paid that. My 2024 taxes, which I had to do last year, I never even did. So I'm going to see this guy. I need a tax guy slash tax therapist, but it's all going to be done come Tuesday, and I'll be good. You used TurboTax when you lived in America. I mean, those things are good. It's just I never take the time. I really need a tax therapist to help me do my taxes and soothe me, tell me everything's gonna be okay. Um, Kind of pathetic, but that's me. I'm not made to do taxes. It's just bad. They already take it out automatically. I don't need. I don't know why they don't. I don't know why they need to get their bother me. Why am I being bothered? And the whole tax return thing, they say, oh, do your taxes. You get tax returns. I just hate the whole fucking thing. When did GPT web app come out? Oh, so it came out November 30th. Wow. Mobile apps. Oh, the mobile app came out in May. So I guess it was the web app I was thinking of, but I started hearing about it in January 23. I didn't hear about it when it came out. Oh, how do I get audit protection? Now I'm becoming worried again. Audit protection. I don't make any money. That's what really pisses me off is I have no money. I make no money. I'm like a bottom bell curve of earners. 2025 income bell curve. Oh, that's pretty good. 45 minutes. Oh. Oh, I'm a little bit below the median. Way below the average, but just a little bit below the median. That's crazy. What a distribution. No, I'm just stopping at 2011 because I want free data. And I found this good free data source, but it only goes back to 2011. Um, I don't know. This is pretty good, so I'm just using this. Yeah, but that's like the thing is I want to use only free data sources. I don't, because I want a tool where you can train your models using only free data sources. Also, this guy updates the data every day, so you can just run a script, pull the data for the most recent day, and then run your model. Yeah, that is. Well, I'm very poor. I definitely suit the stereotype. Wait, what's much cheaper? TurboTax? I just feel better if there's some guy. But then my parents had their taxes done by some guy, or some lady, and she fucked up their taxes like a few years ago, and then the IRS came after them. I think the IRS is evil. I don't think God likes the IRS. What was that? Oh yeah, so I want to do the sector mapping. Yes, this is almost... Oh. So how's this working? Dictionary lookup. I have to figure out how to organize things into a business. If you subscribe to cycles, then you would be missing... Oh, yeah, I know. That's the whole problem. But, wait, where can I get audit? I'm gonna ask the tax guy, can I get audit defense? Can you help me? Yeah, that does sound like an indie type of song. Maybe I should make that song. I love music, but I'm not the most skilled musical guy. I do have an ear for music, but I played the violin when I was a kid, but I'm double jointed in my fingers. And I think that leads to me. I have just bad finger dexterity, so I was never good at the violin. There's this girl, Mihoko Kubo, and when she would play, it was just like beautiful. I could never even come close to her. But I think women probably are generally better at violin because they have better finger dexterity. What's funny is on all the experiments we go to, there's always people who prepare the samples, and everyone, oh, Free Tax USA, everyone who does sample preparation um, is woman, and I think it's because they have better finger dexterity. I have never met a man who makes samples. They make these tiny little samples, they're like 10 microns wide, 10 microns thick sometimes. Okay, thanks, Sir Night Night. That's what I need. Free tax USA. All right, so let's do this file. The problem with the file you gave is that I have 4-digit SIC codes, not just 3-digit. I'm ready to go someday. Yeah, but I'm afraid I don't want Claude to fuck up my taxes and then have the IRS come after me. Aren't taxes like the most unpleasant thing in the world though? Yeah, I agree, Sir Night Night. That sounds like a recipe for disaster. Um, Claude could be my tax therapist. Why, if you say stupid, do you get censored from the YouTube chat? Yes. I've never wanted a therapist for anything, but I need one for taxes. I need a tax therapist. Looking for yourself out there. Do 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 do. Hmm. I need a song. Oh. Well, thanks. But that's okay. You could call me stupid. Keep it simple, stupid, because that's just a colloquialism. And I'm also confident I'm not stupid. Have you ever seen? Do you know what your IQ is, Sir Night Night? I just looked at the IQ bell curve earlier today, and I couldn't believe that this is the IQ bell curve. I had no idea it was centered around 100. Um, because I am doing well on this. I had no idea. I think I understand the world way more. Also, one time I looked up the Myers Briggs personality score. I looked up personality, whatever they called it, and I looked up what's the most common Myers Briggs personality type, and it was I don't know, it was something really funny. It was like neurotic. Um, let's see. Introverted, sensing, feeling, judging. Oh my gosh. Um, so this is like the most common person you run into is introverted, sensing, feeling, and judging. Literally, I think those might be all the worst things. No, well, IQ tests, they always say the IQ test is a horrible intelligence metric. But I don't think that's true. I think it's just like biased towards like the schooling you've had. And like if you have something like test anxiety, or you haven't had like good schooling and you're not like as good at like reading the questions in the test, then you'll end up with a lower IQ. So I think it has like an inherent bias that's not accounted for. Um, uh, I won't say too much on this, but because it's controversial and people always think you're racist when you bring up like the race IQ thing, but I think that kind of explains it. It's like what race has the highest IQ? It's Asians. And what goes on in Asian culture? They're all big on like doing math, playing violin and stuff, and big on tests. So of course they're the best at the IQ test. So you have like it's like biased, but if you're comparing two people who have like the same background, you can, get relative IQs. But it does, if you're good at tests, if you grew up like, with going to school a lot and with that being important, then I think you end up doing better on IQ tests. I don't know. I think anyone who gravitates towards numbers tends to have a pretty big IQ, pretty high IQ, don't you think? And in physics, you run into people with like mega high IQs. So even if you're like pretty smart, you're always humbled by like there's always some geniuses running around. Not me. I'm not a genius. But I've run into some. And they're intimidating. I built it manually using my knowledge manually. Yeah, right, manually. Using my knowledge of both classification systems, I know that SIC 7372. All right, so mapping SIC to NAICS. Yes, that I think that's what I'm trying to get at. Is like if you whatever your IQ is like you could do plus or minus some percent, like you said, say 30%, and it's somewhere like if you test at like a super low IQ score if your IQ is like 70. Like maybe like your true IQ is like maybe up to 90, but if you test your IQ at 70, there's probably no way you're like 150. And conversely, if you test at 150, you could probably be pretty confident that your actual IQ isn't like 80. Um, have you ever seen that video where they do like the different people and it's like the group of six people and they have they've taken an IQ test and they tell them to predict their IQ scores and one girl's like, "So I work in biotech and whatever." And then she picks herself as having the highest IQ score and then picks this other guy as having the lowest. The other guy's like a janitor or something and then he has the highest IQ score. I love that video. Um SIC to NAICS. What does this mean? Crosswalks. Let me get an example. 8200. So let's do 8200. Cultural, language, and knowledge specific to Western middle class. Yeah. Yeah, you saw that, Paprika? Yeah, I agree. So it's not like some truth thing, but it's like a good general indicator, I think. Oh yeah. Yeah, that's exactly right. It's well, it's racially biased. Well, it's class biased, but then if you look at like the distributions of races and classes, it's not a even distribution. But also, don't you think like the Asian thing overcomes class bias? I'm gonna stop talking about that because I don't want YouTube to censor me for being racist. I don't think it's racist though. It's literally just interesting facts of the world. Um, so 8200 isn't an SIC code. Oh, we need to put it here. So what does crosswalk mean? The biotech girl IQ video is the one video. Why would you? Why does that represent the 2010s? 8200 isn't in here. Is that true? In the US or as a whole? Yeah, that's true, Paprika. um, all right, 5531. Does SEC Edgar give NAICS classification? Is there some table which shows mapping of tickers to NAICS in the US? Yes, exactly. No. I want it to add a column into my sectors info, which gives the 2-digit NAICS sector. Save the data. I've included the data. Oh yeah, BuzzFeed was very 2010s because that was like, I used to see those all the time. No one cares about those anymore. Even I used to watch some of those videos sometimes. In like 2016, me and my friend would watch the Try Guys. Now they just, those guys are brutal. But it was fun for a bit. It was fun at first. Missing sectors 2025. No, sectors info. All right, send it. Hey, by the way, have you guys been paying attention to oil? It's going way up. It broke $100 a barrel, which was huge resistance. Yeah, so look, $100. We're over $100 a barrel. This is the last month. So look, it spiked up, had a big run up at the beginning of the war, spiked up here, March 9th, dropped back down. Spiked up again, tried to test 100, fell back down. We should be looking at candles, but this is good enough. Maybe we could get it in Yahoo Finance. Yahoo Finance oil chart. I guess this is futures. Last month. Okay, this guy's thinking. This thing is very slow. Oh, that gave the high, didn't it? Alright, I guess I just gotta wait. I have a feeling this is going to put us in a worldwide recession or depression. Lots of billionaires have been buying bunkers. Yep. Yeah. I feel bad. I mean, it's a disaster for the third world. Africa might be fucked, but what? I guess this is good for Russia. If anyone's Russian, it's good. It's also like I need something to help me out in case oil prices, in case gas prices go up. At least I'll have some. So look at the high here. It actually blew through 120, but came way down. So let's look at the last month. Yeah. So here it spiked all the way up to 120, but dropped back down. Yeah. The open, close. So this had a crazy spike. Here, oh, we got up to 102.4. So we actually haven't broken out yet. We're still testing. But spiked up to 103. Yeah, well, what was that? I was reading about some. Oh, it was. Where do they make like? Oh, it was me and my friend. We were talking about India, and the median, income in India is I think $10 per day. Yeah, well, Canada's like the king of resources. You guys just have to maintain your sovereignty. That's the big I mean, doesn't have Canada have the most resources in the world? Um, but the big question is, can you maintain your sovereignty, or is some foreign power, the U.S., just going to take you over, or Britain, or China? I don't know. That would be my concern with Canada. But you guys have good fundamentals. If you can maintain sovereignty, Canada's gonna. I'm bullish on Canada. If you can't retain sovereignty, who knows what will happen? You're gonna get resource. I guess I can't say that. They're gonna steal your resources. 2 issues in the spot check. Okay, all checks pass. I don't want the new file. I want the code to generate the new column. But I'll download it anyway. Then I could check if they're the same. Yeah, well, I don't know. That wouldn't. I guess you don't want to be part of the U.S. What do you mean the UK gave you up? Like, they let you determine your own government? Or I really don't know any of the specifics about what happened there. All right, come on. Let's get this NAICS script. Ooh. That is intense with that gum. All right, so let's put this in data retrieval. I'm going to call it add NAICS sectors.py. Oh, and I need to change the path. So path equals, oh yeah, that's right. So let's go run that. CD data retrieval Python 3 add no, did it overwrite the macro sector? Oh no, it just added NAI. Good. NAICS macro. Quick look. Good. So now I could check later. I need to do a more in-depth check if that's working. We didn't have to fight a war of independence. The UK just said okay. Yeah, well, you know, that's the natural path of empires is in, you know, if it's like the whole problem of being a liberal empire. If you're truly liberal, then you think everyone should have their own independence, and then therefore we shouldn't have an empire. Unless you need the Epstein class to, you know, override that in our case. Yeah, but isn't, I guess, when was that? Was that World War II? The UK really fell off after World War II. Okay, so now I have the sectors. So now if I go to feature engine, neutralization. If self.needs sector data, where was that? So instead of macro sector, let's get NAICS macro. Macro sector, change that to NAICS macro. And let's look up, is macro sector anywhere else? Whoa, so that's lots of places. All right, so first, change this, NAICS macro, and let's just copy that. Whoa, really? 1876? Or 67, 71, 67, 71. Yeah, so sometime in there. Basically after the US Civil War. That's how I frame that time period in my head. Okay, so now that we've changed that, let's rerun model 18. Let me make sure I didn't change model explorer. Yep. Universe 7, model 18. So let's rerun that. Oh, I need to make sure I saved this. So let's stop this and then rerun it. So I want to try this, and then, so let's add some lines. Yeah, the model's all on stocks. Common stocks, ADRs, which are foreign listed stocks, and then real estate investment trusts. That's what I'm training the model on. So Canada declared independence 2 years after the Civil War ended. Yeah, 1860. I always mix that up. Was it 65 or 66? Oh, it was 65 because it wasn't an. Was it 65? It was. So Lincoln was killed like 2 or 3 months after he was inaugurated. 3 months. U.S. Civil War and Oh, yeah. Wow, so Lincoln basically only served one term? That's crazy to think about. He had almost a whole second term, and instead we got Andrew Johnson. Um, so let's add 2 lines. Where did I add in the sector features? So I'll say model 15. Oh, but I can't redo that, so I need to figure out what universe it's training on. Oh, I'll leave that out for now. So I'll get rid of this. Model 18, universe 7. What do you mean? Oh, by Andrew Johnson? Well, yeah. Yeah, definitely. Really? I don't even know that much about Lincoln. I have that book, Team of Rivals, but I've never read it. It's on my reading list, but I've fallen way behind on my reading list. I've been reading Ulysses S. Grant's biography for a year and a half now. I haven't made much progress. I read a lot of books last year, and I just got stuck. The best biography I've ever read was Napoleon. That was awesome. So Model 18, Universe 7, SIC neutralization. Let's center this guy. My commodity bros and I always talk about governments creating narratives to veil cyclical movements. I mean, that's definitely happening. They want to keep the people happy. Dumb and happy, bread and circuses. Stanton. Who even was Stanton? He was somebody in the cabinet. Secretary of War. What did you read, Paprika? The American Lion? I started listening to that, but I'm unable to listen to audiobooks. I don't have the concentration for it. I start daydreaming. Yeah, Napoleon's like the coolest guy ever. Have you ever done any modeling to arb polymarket Bitcoin pricing markets? No. But isn't that pretty simple? You just look at the price of Bitcoin and you look at, I mean, what's Polymarket doing? I don't even, it's a prediction market. So they're trying to, isn't Polymarket Bitcoin stuff? Like what will be the price of Bitcoin on this day? Will it be above or below this? Yeah, Paprika. Share it in the chat. Tell us about the commodity cycles. Let's change this guy to blue. And let's put his brother over here and make it green. Alright, so this is taking a long time, but that's okay. Okay, it's pruning all the trials, so it's not improving the hyperparameters at all. I just want to see, is this going to improve it? Basically, there's a rough 18.6 real estate cycle dating back 200 years in the US that drives inflation and therefore commodity bull markets. What does that mean, 18.6 real estate cycle? Commodity booms raise regional incomes, driving property demand. Yeah, so if there's a commodity boom, people around the what have more income. Business owners and I guess people who work with businesses, their salaries get raised. Commodity booms raise regional incomes, driving property demand, yet high commodity prices also raise construction costs. Both sectors are currently shifting. Yeah, okay. Property as a commodity. There's a recovery phase after real estate crashes where financial assets outperform commodities. Oh, 18.6 years. And inflation equals commodity outperformance. So, the real estate market booms. Okay, so the real estate market crashes. Then what? Commodities become undervalued. And so buy commodities. Or no, buy financial assets because they're. Oh, interest rates drop. So financial assets do well. Then interest rates go up. And does that help the housing boom? Oh, so there's a bunch of factors to this. Um, so did the model run? It's almost done. 48. You're gonna get 49 and 50. Come on. Here are the features. Whoa. Whoa, whoa, whoa. That looks pretty nice there. So this is on the much more restricted universe I made earlier. So obviously the decile chart looks way better on the NAICS sectors. The performance is better on the long-short spread. So I'm pretty sure the metrics should be better. Oh yeah, they are better, because look, information coefficient is now above the threshold. Whoa. Now everything's above the threshold. I think. Okay, so information coefficient, better. Standard deviation, much better. It's 8 times, 8 point something. ICIR, way better. Daily. Way better yearly. Um, where are my goal metrics again? I didn't change the universe back to 1, did I? No, it's still universe 7. Okay, so we're in the range for information coefficient, but it's still pretty low, but just barely in the range. Standard deviation of the information coefficient is good. We improved every metric by using NAICS sector neutralization. Information coefficient to information ratio 0.02 to 0.03. Are you going to bed? Already? It's only
10 o'clock.
Oh, it's 10 o'clock.
It's hot and stuffy.
I'm about
here.
to end my stream.
I love you.
Nighty night. Love you too. Thanks for helping me with my tax stuff.
Well,
I feel relieved. Hey, do you know if that guy has audit protection?
audit protection. Well,
Somebody on my stream said get audit protection.
well, he doesn't. What happens is if you get audited, you have to ask him to come with you.
Oh.
Yours is very simple. Ours would be people who would get audited, because we have a business and all that stuff.
Okay.
So yours is simple.
Well,
as long as you give him the numbers,
I'll be good.
Yeah, yeah. And do you know how much you paid for that one?
In
2023?
No, I don't remember, but all I know is I calculated, well, because Johns Hopkins took my money out, so I calculated what would be the tax rate when I combined everything, and I did it for my Omni money, and then I rounded up by like 20%.
Well, they probably can find out. You could probably
Oh, I could find out on the IRS site.
Yeah.
I'm sure.
Yeah.
Okay,
Right,
nighty night. Love you.
I love you. See you in the morning.
See you then. Hey, buddy. Okay, so wait. I gotta read through these. Oh, Sir Night Night says he hit the nail on the head. Yeah, you buy financial assets after real estate crashes, then the transition to commodities when the new housing starts to exceed the mean. There's an interesting book on this I have been meaning to finish called The Secret Wealth Advantage by Akash Patel. Akash Patel. Akil Patel. Good. What's it called again? Secret Wealth Advantage. My coworker was telling me the Patels, people with the last name Patel own 60% of the hotels in the U.S. Phil Anderson. Okay, so T statistic. It's still missing the T statistic, but it's good on every other statistic. So the next thing to do is I'm going to go to advanced models, update the walk. Oh, okay. So I need to go to model. And when am I printing the, I think it's in run model. Model Explorer. So it's printing the features there. Model 18, evaluate quantile spread, train model. So it's in train model. Train model. Test model. So I'll say show feature importance, should be a bool, default it to true, and then here we'll say if show feature importance is equal to true. Wait, so this year's the peak in what? The real estate market? Show feature importance. Okay, and then in train model, we'll also add that show feature importance. Should be a bool that defaults to true. And then when I test model, say show feature importance is equal to show feature importance. Now in the walk forward, in advanced models, we can do, so advanced models, no, not this, run walk forward. When do we iterate through the folds? While true. Model, add features, model, add target, train model, and then show feature importance is equal to false. Hit the peak. It's like everything's converging at once. The Iran war, the that real estate cycle, the AI bubble, the unemployment from AI. That's kind of the dichotomy of AI, is we're going to have big unemployment from it, but it's also a bubble. But that's because lots of people have fake jobs. Okay, now I can run the walk forward on model 18. And then, so that's down at the bottom. Model 18 walk forward. Get all features and then do the walk forward. I could just override it. Okay. This year is going to be a turning point for major global. Okay. But yeah, the housing market crashes first, right? And so the housing market should have crashed a year or 2 years ago. U.S. median home value. I mean, I guess could you call the crash coming down from 2022? So you think it's coming down from this? But we also, I guess you couldn't say this is a peak. This is like consolidation and then it ripped. 410,000. That's so 2000. So this was clearly a crash, but home builders crash first. Anyway, I'm gonna do I'm gonna read those books. Oh, and now I'm gonna do walk forward analysis. But that's gonna take a long time, so this is gonna be the end of the stream. So turn that guy off. Turn this guy on. I'm watching for things like home builders to crash over 50% before I even dream of selling my commodity stocks. Housed. Yeah, I remember from the other stream the other night. So let me run this. Okay, so that's it for this stream. Thanks for watching. And yeah, have a good rest of your night. Adios.